Hey, this is Mike, and I want to do a little educational video about when should you sell a stock, because I think a lot of people who are new to stock trading, they'll see a stock move down and then they begin to panic and sell, and that's not always the best move for a number of reasons. One is sometimes when a stock moves down big, it could bounce right back up. It depends on the situation. And another time, you can end up selling a stock and then you never end up buying back into the stock market. That happened to me when I first started trading stocks back in the late 90s, where after the 2000 dot-com crash, I stopped trading for about 4 years because I evaporated my portfolio. I did a video on it, how I lost 100,000 in the stock market. So I wanted to show you when you should sell a stock. Either sell that stock and dump it forever, or sell the stock temporarily and then buy it back later. So there are really only 5 major points I want to cover in this video. So I'll start with with this first thing. Before I go into the 5 points, I do want to emphasize it's always better to hold a stock for the long term. And I want to give an example of 3 great stocks that have made many millionaires that had big drawdowns. So here are the 3 stocks. Amazon in the year 2000 went from 160 down to $8 a share. It had a 90% drawdown. Berkshire Hathaway, probably the most successful stock of the past half century, has gone down 50% 3 times in the last 50 years. Also, Apple, and I'm talking about Apple after 1998, after Steve Jobs became the CEO again and had its amazing run up. It had a point where it dropped one time, I remember, 50% in price. And this was in one day after a bad earnings report. I think it was sometime in the mid 2000s. So you do have stocks that the greatest performing stocks of the past 50 years have had huge drawdowns. So sometimes you just want to hold through these really bad times in stocks. However, I do want to show the rare times that you may want to consider selling a stock. So let's start with point number 1. If the stock has an accounting scandal, now this is an example of like Enron, where Enron had an obvious accounting scandal that they were not making the money that they claimed they were making. If a company has an accounting scandal, that means you can't trust anything that the company says. And at that point, you should not own the stock, because even if the company has good news, you don't know whether to believe them or not. So if anytime a company has an accounting scandal, or the CEO is not reliable, or the CFO is not reliable in what they say, you don't want to own that stock. That's a good reason to sell a stock. Also, if the company has a lot of insiders that are selling that stock, it usually means that they know something that the Wall Street hasn't officially been told yet. Maybe they know that the company's about to close a lot of stores, or a lot of bad sales, or the company may be running out of cash. If you see a lot of insiders selling, that's a good indicator that you may want to sell that stock. For the next 2 points, I want to talk about maybe short-term selling. Um, if if the company is running out of cash, now this is an example with Tesla. Tesla was literally a couple of years ago was really about 2 or 3 weeks away from running out of cash. They found a way to raise more money and survive, and they've been able now to be 10 times bigger than Ford, 10 times bigger than GM. So if a company's running out of cash and you're getting nervous, you could go ahead and sell the stock, but keep an eye on that stock, because if they're able to raise cash or get a buyer, then you're going to want to buy back in if you believe in the company. But that might be a short-term reason. If the company's running short on cash, that you may want to sell stock in that company. Another short-term reason to sell stock in a company, if the stock falls below its 50-day moving average. The 50-day moving average is a strong level of support for stocks. So if a stock falls below that, it's going to continue falling at an accelerated pace all the way down to the 200-day moving average. And you may want to consider selling the stock if you're a short-term trader. You could always buy back that stock when the stock rises above the 50-day moving average, because then that 50-day moving average will be a strong level of support. And finally, the final reason you may want to sell a stock simply if you don't believe that company is going to survive. So for instance, let's say it's a retailer, has a bunch of physical retailer shops. Like let's say it's a company like The Gap, or a store. And this is a store that's selling clothes and does not have a strong e-commerce presence. You may think, well, look, this store may not survive if their main source of revenue are 200 physical outlets in malls that are losing anchor tenants, or these stores are getting decreasing foot traffic. That company may not be around much longer. So if you don't feel that company could survive, like a Sears or something like that, you may want to go ahead and sell the stock. So those are the 5 reasons why I personally would sell a stock. Now, I do try to hold on to stocks for the long term. One of the reasons why too is long-term capital gains taxes. Your taxed on your capital gains a lot lower when you hold for over 12 months. So I always like to be a short-term trader. However, there are times when you may want to sell a stock. So I hope this video was valuable for you. If it was, please leave a like and go ahead and subscribe. I do lots of educational videos on stock and options trading. I also do breaking news on hot stocks throughout the day. Okay, thanks a lot. Bye.